Hi everyone, welcome once again with another new topic, and this topic is about market indicators. So friends, in the last one of the videos we have seen one of the indicators, that is the advanced decline line. Actually we are discussing about market indicators, and we have seen in one of the previous lectures that indicators are of two types. One is the breadth indicator, another is the depth indicator. Actually we are now discussing the breadth indicator. Under the breadth indicator we have already discussed the advanced decline line. For details you can see the description box where the link of the video is been posted. We have also seen what are divergence, and that will help us understand to trade profitably, and the main idea of using the indicators is to understand divergence. This is one of the objectives. However, we will see in this video another very two important indicators. The first one is already discussed, that is advanced decline line, and here in this video we will see the second indicator which is very commonly used, that is RSI. You must have seen RSI in your trading platforms. Now let's understand what is RSI. RSI refers to relative strength index. This is a market indicator, relative strength index. Now what is this relative strength index? We are trying to construct an index to indicate or to help us indicate the price momentum. What would be the momentum of the price? Now RSI is calculated with the help of a formula, and that is 100 minus 100 divided by 1 plus relative strength. Okay, RS means relative strength. So let's keep this formula in mind and now understand how this RSI is calculated. Okay, RSI is calculated by taking, say, 14 days data. You can go for 70 days also. Suppose 14 days data we have taken. Now out of this 14 days you will find out the closing price of the data. Okay, you will find out the closing price of the data. Out of the closing prices over the last 14 days, 1, 2, 3, 4, 5, this way you will go to 14 day, you will find which are those stocks which have shown a gain or advance. How many stocks have shown advance? Okay, how many have shown advance, and you will see how many have shown loss or losses. So we will see the losing stock and the gaining stock. Okay, and then I will take the average of the gaining stock and average of the losing stock. So let's call this to be A and this to be B. How do I know what is the average gain? I will find out the gain total, okay, and divided by 14. Okay, so say gain stock divided by 14 days, similarly losing stock divided by 14 days. Okay, I get A here, I get B here. So when I divide, so RS, let's understand what is relative strength. Relative strength is A divided by B. Okay, so I got A divided by B, say 0. Whatever value, say hypothetically we can get any value, and I will put it here 100 minus 100 divided by 1 plus, so it could be say 60.23, or say this way we will find out. Now after that we will get a value. Now this value, if RSI value is less than 30, we have a benchmark set, and there can be an RSI value which is greater than 70. If I find that the RSI value is greater than 70, so if you plot it, okay, in the platform you will see there is a line. So this line means it is crossing 70, and suppose it has come this side, and if it is going down this line, that means it is going down from 30. Okay, so 70, it is crossing 70, it is crossing 30 downside. Then what is its implications? If RSI value is less than 30, then it means that the stocks are oversold. I repeat again, if the RSI value is less than 30, means the stocks are oversold, and now there is a chance that there is a possible tendency for uptrend to follow. Whereas if it is more than 70 means stocks are already overbought and the downtrend is likely to follow. Okay, the downtrend will follow and here the uptrend will follow. So this is the understanding about the RSI. However, this RSI will be compared with the price movement to know if there is any divergence. Okay, and understanding RSI is helpful because most of the traders, they rely on RSI as one of the leading indicators. Now let's move on to the next one, that is the oscillator. Now let's see the next indicator, that is the McClellan Oscillator. Now what is a McClellan Oscillator? McClellan Oscillator is a breadth indicator. The idea is very simple. We will take the closing price of the price data, and we will see how many is the advancing stocks, means the gaining stocks, and we will see the declining stocks, how many declining stocks. Okay, now I will calculate RANA, RANA, which is nothing but the ratio adjusted net advances. How it is calculated? It is calculated advancing stock minus declining stock divided by advances plus declining. So this is known as the ratio adjusted net advances. Okay, I will calculate the RANA, and then based on this data that I get, I will segregate the data into 19 days exponential moving average. I will find out the 19 days exponential moving average, and then I will calculate the 39 days exponential moving average. Okay, so see, the idea is very clear. The closing price I will take, and I will take how many stocks are advancing, how many stocks are declining. I will calculate this minus this divided by this plus this, the total volume, and then we will see the 19 days EMA on this. EMA means exponential moving average, and we will see the 39 days exponential moving average. Okay, now the McClellan Oscillator is equals to the 19 days exponential moving average minus the 39 days exponential moving average. Right? How do we interpret this? If you find that the value is positive, that means more stocks are advancing. The advancing stock is dominating. Okay, the short run momentum is dominating. That means the advancing stocks are increasing, and therefore there is an upward trend to follow. Whereas if this is negative, means more of the declining stocks are dominating, and therefore there is the downtrend that is likely to follow. Friends, this is all about the McClellan Oscillator. So we have discussed the McClellan Oscillator. We have also discussed the other one, that is the relative strength index in this video. Friends, this is all about the breadth indicators. There are so many other indicators, though the computations are not required as it is already available in the trading platforms. However, we have seen conceptually what they are and how they are computed. In the next video, we will see about the sentiment indicators or the depth indicators. Thank you for watching. Take care. Bye-bye.